Hey everyone, let's go ahead and get started in the interest of time. And then as we have last minute folks roll in, they can go ahead and get caught up. Thank you for joining us or rejoining us today. My name is Ashlyn Levitt, and I'm the Assistant Director of Events and Volunteer Management for Grand Valley's Alumni Relations Office. Through our partnership with Consumers Credit Union, we have invited you to join us for lunch as we dive deeper into a variety of key financial topics. Over this 8 weeks we will be together, we will take a deeper dive as we learn about identity theft, home ownership, mortgages, and today's presentation on credit reports and credit scores. Before I introduce our presenters, I do have a couple quick Zoom keeping notes. This presentation will be recorded and will be accessible on our Alumni Career and Life Stage Resource Library. I'm going to send that link in the chat right now if you're interested. Excuse me. Please feel free to submit questions using the question feature at the end of each section. For any questions that were not answered at that time. We plan to wrap our program up right before 1 p.m. With that, I'd like to thank our friends at Consumers Credit Union for partnering with us today to bring you this series. Today's program is led by Casey Byers and Chris Rusche, who was also a 2008 alum. Chris and Casey, thank you so much for being here today.
Thank you. We're excited to be here.
I am going to give you share permissions now. There you go.
Perfect. All right. We are excited to be here. Thank you for having us. I was excited to have this opportunity to talk about credit scores and credit reports just because of how important they are and how often I think they're misunderstood. And so hopefully we can provide some clarity today and help kind of equip you. As you get out of college, sometimes it can be tough. You're trying to get started, right? You're trying to buy a house, buy a car, find a place to live. And so your credit score really impacts so much of your life. So we're excited to help you today. I am going to try my best to speak slowly and enunciate. If at some point you think I'm having a stroke, please send something in the chat that just says, hey, slow down, please. But we'll get going here. Our goals for today, of course, we're going to explore the importance of credit scores in your credit report, how to access information about your credit score and report. This is going to be extremely important when you're trying to build and maintain a good credit score. It's going to be important that you understand how to access and monitor that information. And then what do you do with that information, right? So we're going to help you develop strategies to build and improve your credit. And lastly, identify ways to protect your credit from incorrect claims and fraud. We all know how rampant fraud is today and the unique ways that fraudsters can steal identity, can open loans for you, even sometimes a family member. So we'll go through all of those things today. And then I'll switch that over to Casey.
Alrighty, let me get mine shared here. All right, perfect. Hi, my name is Casey. I am also a 2020 graduate, as I saw in the chats there. So just thought I'd throw that out there. And what we're looking at right now is the basic range of credit scores. Those are 3-digit numbers that tell a lender how likely you are to repay your debt. Different lenders use different criteria to calculate it, but in general, that data is grouped into 5 categories. We've got poor, which is less than 579. People with a 579 could probably use help rebuilding their credit and restoring that credit history. fair is 580 to 669. This is a range that it may be difficult to qualify for loans. If you get a loan, you most likely would have a higher interest rate than a higher credit score may qualify for. The good criteria is 670 to 739. If your credit is between 660 and 740, you may have blemishes on your credit report and you might have a restricted, it might be restricted to higher than average interest rates on loans as well. Along with very good credit between 740 and 799, a credit score between that range is allowing you to qualify for most loans and probably have a solid credit history with a few missed payments or late payments. Your credit history may simply just be shorter as well. Exceptional is above 800. If your credit score is above 800, you may have the strongest credit history and qualify for the best loans and interest rates. Next, we'll take a look here. And then did that flip to the next page, Chris?
Yep.
Okay, perfect. So we'll take a quick poll, just silently think to yourself here. How well do you know your credit history? Think about that for just a moment. Think about that as we go along today as well. And think about how that answer may change. Now we'll talk about the 3 different credit bureaus. We've got Experian, TransUnion, and Equifax. The bureaus keep track of your credit history separately, so it's a good idea to utilize each one of them. If there's large variations or discrepancies amongst these reports, you should definitely reach out to those individually and figure out what that discrepancy might be. Credit score models, those include FICO and Vantage. Majority of lenders still use FICO credit scores for lending decisions. And in 2006, Vantage was discovered in a collaboration with the 3 major credit bureaus. Not every credit score is the same because not only are there there's these 2 different models that the scores are based on, but they also have different models are used for the different products that are offered. For example, mortgage applications may yield a different score other than applying for a credit card. So we'll look at 2 different examples on that. So if you're applying for an auto loan, for example, your lender might use the FICO auto score. But if you're applying for a credit card, your lender might use the FICO bank card score. If you don't have much credit history yet, you may sign up for the Ultra FICO, or you may be signed up for the Ultra FICO to have your banking activity factored into that. And if you are curious about where your credit does fall, if you are members with the consumer, or if you are a member and you have the Consumers Credit Union app, you are able to check it for free on there in the online banking. And then if you are not a member, you can see the chart here on this slide. We'll pause here for just a moment and you're able to see if there is a fee associated, because often there is, and there are a few that do offer free credit viewings to view that score currently. So if you want to take a note just on that page to view the fee associated, if there is one. Alrighty, and then we'll hop on over to our next slide and Chris will go into what is a credit report. Oh, and I'll stop sharing.
One other note, part of the reason that we really shared all the different credit score models and different agencies is that we often have people come in and they say, hey, my credit score, I checked my credit score, it said it was 730, how did I get denied? And what they're looking at might be a different score than what we use. And all different institutions and agencies also use different score models, and sometimes they use different reporting agencies. And so it's not always going to be as simple as I checked my score somewhere and it's accurate. There's a lot of different scores out there. So just make sure that you're looking at all 3 agencies, as she said, to make sure you kind of have an idea of where your score is at. Okay, so a credit report. Can you see the screen, Casey? We're on credit report?
Yes, Chris.
Okay, perfect. So credit report is essentially a snapshot of your credit profile, right? Your credit report is showing you, hey, what is the data that provides my score? And so typically there's 5 categories that when they look at your credit report that are making your credit score. Number 1 is always payment history. Number two is usually like your debt to balances is a way to say it. But essentially, if you have $50,000 in total loan balances, what is your or loan amounts? What's your current balance? So is it 50,000 I have in total loans, but I only owe 30,000 left? And the larger that gap is, the better. Mix of debt makes a difference, and how long your credit history is, length of credit history, and then also some of your credit inquiries. So, but a credit report is what you're looking at that says, hey, this is my snapshot of what everyone else is seeing when they look to find out what my credit score is. And it really helps us understand, hey, when I look at this credit report, is this person going to pay me back or not? And so when you see different interest rates, it's really a way for the institution or the lending company to say, the risk is kind of high here, so I need to charge a little bit more because there's probably going to be more charge-offs in general, and we have to cover that loss in a sense. And so that's why you see those different credit or those different interest rates in relation to your credit score. All right, let's go on here. So this is just a snapshot of your credit report. This is very basic. It's just to give you an idea of what it looks like if you never have. And we'll kind of break down into sections real briefly so you kind of know what you're looking at, right? So, and then we'll go into why they're important. First, you always have your personal information, your name, address, date of birth, social security number, employment information is often on there. And then usually following that is what's, we like to call the meat and potatoes of your credit report. If you see here where it says account information, what that means is all of my loan accounts. So any loans or borrowing that I'm doing, it's going to list each of those items, and it's going to show, where the money is owed to, when was it opened, what was the original balance, what's my current balance, because we talked about that's important. And then, of course, the big number one thing is payment history. You're going to show if there was a 30-day late pay, a 60-day late pay, how many days late, is it currently late? And that is going to have the biggest impact on your credit report. So that's very important to look at. And then after that, usually what you'll show is public records. Public records are really going to show, do I have a bankruptcy? Do I owe money somewhere that was charged off? Those are those records that have been sent almost for collections, if you think of it that way, for money that you didn't pay. Credit inquiries, that's what we talked about, right? Anytime you apply for something, that inquiry is going to show up on your report. Where that can affect you is if you have a lot in a row. And so just make sure, you look at that. And in a minute, we'll talk about why each of those is important. And then any special messages, like if there's fraud on your account, contact information, just some things to note. I keep saying, sorry. So why are these important? Of course, public records are important because you want to make sure there's nothing filed under your name that shouldn't be there, right? Is there a collection that was not yours? Does it show you filed bankruptcy, but you never did? Those are going to key you into if there was any kind of like identity theft or fraud or something that accidentally got assigned to your name, but maybe it's supposed to be your parents or your brothers. Personal information. I know this seems weird that it would be important, but what if an address shows up that's not yours? What if the social security number doesn't match? Just keep an eye on it. Make sure nothing shows up weird that shouldn't. Credit accounts, again, this is the largest portion that determines your credit score. You absolutely want to look, is there a late pay showing up that I paid on time? Is there a late pay that someone said they would forgive and didn't? Is there an account loan there that's not mine? Is there collections, under there that I should take care of? So again, look at your credit report, understand what each section is, and just make sure there's nothing that looks out of whack that you need to then, submit a correction to the credit agency. One item of note here, we often get this question. I don't understand how I don't have a credit score. I've been paying rent for 6 months and utilities and my cell phone. I don't understand how I don't have a credit score. A traditional credit report is only going to show money that is lent to you. what we're trying to determine with a credit report is if someone is borrowing money from us, how likely are they to pay that back? And so it's great that you pay your bills. And we kind of mentioned it earlier. There is a way with the Ultra FICO, and I think Casey might talk about it in a little bit, that you can request to have those items included as part of your score. But unless you do that, these items are not going to show up in your credit report unless they go to collection. So it's still important you pay your bills. If you get too far behind on rent, too far behind on utilities, they can send those collections that will then show up in your credit report negatively. So now that we know kind of what a credit report is, the kind of the general nuts and bolts and why it's important, let's talk about an example. So Anna and Bella have been friends since middle school. They are both single and have a steady income to pay their bills. Anna and Bella decide to buy homes in their childhood neighborhood. Bella receives a loan without any issues. Unfortunately, Anna has a difficult time getting a loan. When Anna is finally approved for a mortgage, her interest rate and insurance premiums are much higher than Bella's. For the sake of time and ease, because it's not an interactive seminar, just think about that. But we're just really going to talk about why that might happen. So, of course, there's things when you're buying a house or a car that matter, like debt to income, the value of what you're buying. But what is ultimately usually the driving factor of any loan you're trying to get is credit, right? So most likely, Bella has really good credit and she's able to get a home no problem, has a good interest rate. And as we talked, Anna might have poor credit. And of course, that's going to make it harder for her to get the loan. And if she does, there's a chance that she might have to pay a higher interest rate. And so the reason we talk about this is to highlight how important credit is and how it impacts your life. So when we talk about that, some of the things that are impacted, of course, the obvious one is loans, right? I want to get a mortgage. I want to buy a house. I want to buy a car. I want to buy a motorcycle, whatever it is. You need a good credit score to get approved. And the better your credit score, typically the lower the rate. So of course, credit is going to help you save money on any of your loans. But outside of that, credit still impacts you in ways you might not realize. When you go to rent, your landlord is going to likely look at your credit and your employment, and it might be hard to get a place to rent if you have bad credit or a bad score. They might require a large down payment or security deposit to rent. Your cell phone, surprisingly, they check your credit score. Again, you might have to put a down payment to get a phone versus being able to just get that, by putting a credit card on file, for example. A lot of people don't know, but insurance, part of your insurance rating is based on your credit score. So when you go to get insurance for a car or your home, if you have a poor score, that could drive up your rate on your premium. So again, job hunting too, employers can look at that and they might think, that's what's going on here? There's some red flags. I don't know. I might want to ask them about this. But in general, the theme here being credit score is extremely important. It's not something you want to just hope that it ends up okay. You do want to make sure that you're looking at your credit report and monitoring it and trying to build that score up. Now I'll hand that over to Casey. She's going to talk about building credit. Oh, you know what? I lied. Before you go on, Casey, any questions so far? We forgot to stop at the end of each section. Any questions so far?
Yep, there was just one question that came in the chat. It says, when companies pre-approve you for their credit card, does this show up in your credit score or negatively impact your credit score?
No. So I think we're going to talk about it in a little bit. There's something called a soft pull and a hard pull on your credit report. And so typically what's happening is there's a couple of things in the background that can happen. There's marketing companies that will use a soft pull to gather your information and determine if you're likely to be approved. And then they can kind of share that where companies can send out pre-approvals. The company itself can do the same kind of research where they're just getting I think what it is, they just kind of get your score, but not all the details, and it can kind of help them decide if someone should be pre-approved. But soft pulls do not show up under that part of your credit report that says inquiries, only hard pulls, and you should know about every single one of those that is pulled.
Great job, Chris. We'll go on to building credit here. And, alrighty. So many young people typically have no credit history, which is not a bad thing, so don't panic. It is not the same as having bad or poor credit. Although people without credit may face similar difficulties in getting loans and proving their credit worthiness. However, there are many steps you can take to building that credit. One is opening a line of credit. This could be a credit card through a bank, retailer, or a small type of loan that you can pay off over time. Number two could be requests that your payment history be reported. Like Chris was saying, rent and utilities is not typically reported on your credit score, but you are able to request that your landlord or utility company report that positive payment. However, remember that the landlord or utility company is not required to do so, even if you do ask. Number three is optional and does vary heavily on different factors. Opening a joint account, you may request a family member or a good friend that you're with good credit to co-sign on a loan or credit application. But remember, those actions do affect your credit that they take. So remember that. Step number four is pay all your bills on time and in full. Again, this is very important. Never miss a payment. If you think you're going to miss a payment, contact your creditor and see if there's different options available on that. Other types of loan options to build that credit. We'll touch on point number 2 first, which is special products such as secured credit cards and credit builder loans. These are designed to boost your credit. They may have restrictions on how much money you can borrow and may require you put some cash towards collateral. And then as well as here at Consumer Credit Union, we do offer our Credit Smart program. Chris actually works directly in our office and he will explain a little more on our Credit Smart program here real quick for us.
Yeah, two items here. One, we don't want to sell what we offer. We want you to use whatever's best for you. But I do really, really love our Credit Smart program in the sense that it's an alternative to what most other places offer. So when we say prepaid credit cards, it's really like a secured credit card is what we're talking about for point 2. And why we say prepaid though is that the big thing there is you have to usually put money down, right? They're holding your money for collateral. So maybe it's a $500 credit card, but you have to pay $500 up front that they just hold. It's $500 you can't use, you can't see, you can't touch while you're using that credit card. What we came up with is something that allows you to get to that credit card without putting any money up front. So we start off with a $500 loan that you pay on, but you don't put money up front. As you make a payment on that loan, that money is then deposited back into your savings account. And all we want to see is a 6 months worth of those payments. And that payment history shows up on your credit report. And then at the end of that 6 months, if you've made all those payments on time, which again, no money goes out of your account that doesn't come right back in, then we give you a regular credit card after you do a credit counseling session with our partner GreenPath. So a nice alternative that you can use to build credit without having to put money up front that maybe is tough that you can't do at that time. Both great options, both are good for your credit. Just wanted to highlight the different options that are out there.
Thank you, Chris. And so if you follow these steps here that we went over and you feel like you've built your credit score up, you are able to request one free credit report a year from Annual Credit Report. As well as mentioned before, soft pulls on your credit, such as the Consumer's Credit Union app, that'll allow you to check and monitor that progress on your credit report. And then another quick check in here with a story kind of like the tale of two friends. We've got Anna just bought a new house, but it is further away from work than where her old apartment was. She needs a new way to get to work and would like to purchase a new car. Anna has taken some steps to improve her credit and is now eligible for a car loan. She wants to use the loan to get a new car, but she has a problem. She needs someone to co-sign. Anna decides to ask her friend Bella for help. Now, going on to co-signing, like I said, this is a very difficult decision to make for a lot of individuals. You have to put all your trust into the individual, as well as them putting your trust that putting their trust into you that you are going to make your payments on time and in full, because this will affect both of your credit scores. So keep that in mind if anyone asks you to co-sign or if that's a decision you're contemplating as well. We'll go to Chris here on repairing that credit score now.
Yep. Any questions on building credit before we go on?
No questions have come through the question function.
Okay.
Thank you.
So we have talked about credit score, what it is, why it's important. We've talked about your credit report and how that's really your vital tool for building your credit and monitoring your credit and repairing your credit. And we've talked about how can I build it if I don't have any. What we're going to talk about now is how do I repair my credit if I have bad credit? And then next we'll talk about, hey, I have decent credit, how can I get it better? So those are the three ways that we're talking about how to utilize credit. How do I build it? How do I repair it if it's bad? And how do I just make it better if it's okay? So here we're talking about repairing credit. You've maybe had some medical stuff happened, lost your job, or maybe who knows what happened, and you've got a bad credit score. It's not a 0, it's actually bad. It's like in the 500s, like we talked about before. And you're saying, hey, I got to dig myself out of this hole because I want to buy a house in 3 years or 5 years or whatever it is. So number one, when it comes to improving your lower damage credit, is to monitor your credit report and score. As you're going to build it or repair it, I should say, you want to look at that credit report and say, hey, where are my delinquencies? Where do I owe money? What do I have that's outstanding as a balance or a high balance? So you kind of can make a game plan for how you want to attack repairing that credit. But the biggest thing here for when we say monitor is as you work on building that credit, you want to ensure that those things are showing up on your credit report. If you pay off a collection, you want to make sure that they report that collection is paid. And you want to make sure that it's done in a timely fashion so that you don't forget about it, or maybe you want to do something faster. The faster you can get approved for a new loan, the faster you can build credit. So really want to monitor that credit report. And really, really, really important here is while you're repairing your credit, continue to pay your bills on time and in full. We've talked about this. Even if you're paying off collections and you're doing all of the right things, payments are still the number one factor in your credit report. So I'd hate to have someone do all this work and effort to pay off money they owe and then miss their payments because they're spending all this money paying things down and they're really shooting themselves in the foot, right? So make sure as you're repairing your credit, pay your bills on time and in full. And if you feel overwhelmed, seek help from a credit counselor. We're going to talk about making sure you use a reputable one, but credit counselors, that's all they do. They say, hey, we're going to figure out the best way to help people repair their credit and get out of a hole, and they're specialists in it. Sometimes there's a fee, but if you're talking about building your credit and you think about long-term, the money and the time it saves you, credit counselors can be a great resource, and we'll talk about some of those. And then lastly, this might not apply to a lot of you students who maybe are just finishing up college, you went out of high school, you don't own a home, you don't have the ability to get multiple credit cards. But just to mention, there are things that sometimes make sense, like a home equity loan or a credit card balance transfer. If you feel like you're struggling because you have a lot of credit card debt and they're high interest rates, if you have enough income to support it, sometimes you can qualify for a credit card that has a balance transfer. And what that does, it allows you to take a balance or multiple balances from high interest rate credit cards onto one credit card that has an introductory or just a low base rate. So you might be able to take a couple $1,000s in 20% interest rate credit card debt, consolidate it into one card that might be doing 0% for 12 months or 1.99% for whatever time that is. But there are options out there as far as an actual product that can help you as well. So again, make sure you keep up on your credit report as you're working on it. Continue to pay your bills, seek help if you need it, and there are options out there if you can qualify. Again, we talked a little bit about getting help from a credit counselor, and we've also talked about how common fraud and scammers are. So there are credit repair scams out there. They'll say, hey, pay us and we'll take care of your debt. Here's a quick example. Anna researches several companies to repair her credit. One company promises to remove all bad credit from her report. All she has to do is pay an upfront fee. She's worried about her bad debts, but the company assures her that it can scrub all negative information from her report. The company also advises Anna not to contact the credit bureaus directly, since doing so will negatively affect the company's efforts. Red flags, a lot of red flags here. Typically, you shouldn't have to pay a bunch of upfront fees for anything, right? You want to make sure you're getting the service that you're paying for. And we will tell you that no credit counseling or repair companies can just scrub all of your information at once. There's not a button that says, hey, this is a good person, we like them, just take that all off of our reports. And that legitimate information is on there. It is legitimate. They're not going to be able to scrub all that off. And the other thing is warning you not to contact the credit bureaus directly. It is your legal right to dispute errors for free, and you should. And you should always feel free to reach out to your credit bureaus if you see something you shouldn't. And so you just want to be careful if you work with credit reporting agencies, make sure you just feels good, right? If it's too good to be true, it probably is. Again, if you need to dispute, you can do that directly. And again, the Experian, TransUnion, and Equifax are the 3 credit bureaus that you want to be monitoring. For a resource, I believe this is on, you do have a participant guide. We didn't give you something to walk through each slide. We just kind of want to give you the resources. But in the slides, if you need copies and you don't have access to those, please reach out. We do have a couple recommended places that are legitimate. The National Foundation for Credit Counseling and the Financial Coaching Association of America. Those are kind of like federal or state agencies that you can trust. And then we partner and we always recommend Green Path Financial Wellness. Some of those services are included as a member if any of you are, but even if not, Green Path is a great resource to help you repair your credit. And then lastly, of course, as we talked about how to improve your credit, any questions before we go on to that?
We do have just one question here.
Mm-hmm. Oh, I didn't hear, I lost you.
Oh, I'm
Chris, it
sorry.
looks-
Can you hear
Go
me?
ahead.
It's why does my credit score stay the same when I have auto pay set up?
So it probably is not going to change a lot if you only have one loan. So your payment history is something that happens over time, and the more payments you have in your history, the more it will affect it. It should go up slowly. If you only have one loan and you're making one payment a month, you should eventually see that go up. But there's a lot of factors that affect your credit score. So if you only have one loan, you're missing out on mix of debt factor. You're missing out on, especially if your balance is new, your hot balance is still high in relation to your original balance. And so you're not getting that benefit. So there's a lot of things that go into your credit score. So sometimes if it's just one loan, one payment at a time, it's not going to have a large impact, but you should see that over time.
So just to clarify for this participant, whether you pay manually or via auto pay, that would not be
No,
that
no,
would not affect your score.
Yes, auto pay is a great option to ensure that you're not missing a payment, but their credit report. So what happens is that anyone who has a loan outstanding, wherever you're making that payment to, they're actually reporting those payments to the credit reporting agency. And they only report whether it's paid on time or late. That's it. They don't report how it was paid or how much was paid. They just report, was it paid and was it paid on time?
Thank you. That's the only question right now.
Correct. Thank you, Chris. Let me go ahead and get my screen shared. All right. So now we'll look at how to improve your score if you do have one established already. And we've covered a lot of things that could potentially affect your credit. The good news is, with a few good habits and strategies around managing your credit and your debt along the way, can get you to improving that credit score quickly. So a few basic strategies include use your available credit wisely, use less than 30% of your available credit and do not max out your credit cards. Pay your bills on time, pay off your credit bills each month in full if possible. Doing so shows the agencies that you are responsible and lowers that total amount of money you owe. Pay off your loans on time. Not only does defaulting on your debt cost you in fees, but it can also quickly damage your score. So it's very unfortunate that hurting your score is often easier than improving your score. So keep that in mind. Do not apply for several accounts in a short period of time. Like Chris was saying in the beginning, that does report how many times and when the credit is pulled for a hard pull. So that's very important to watch out for. Making a financial plan or a debt management plan to reduce that debt. Create or follow a monthly budget. Periodically reviewing your credit report for accuracy. Again, there are a wide range of assets that can be, or websites that can be used to monitor that score and that report specifically. So keep an eye on those frequently just to see your improvement. So being mindful on your spending and monitoring your credit are good habits to develop that and maintaining your score. As a summary today, understanding the importance of credit scores and reports, knowing how to access this information about your credit scores and reports, identifying several strategies on how to build and improve those, and understand how to protect your credit from incorrect claims and fraud. So the good news is if your score is lower than what you'd like, don't be discouraged. Keep on track for credit reports on a regular basis, like we said, and adopt responsible credit habits so your credit score can be as high as possible. It can be an uphill battle, it may seem right now, if you're looking at this and wondering where to start. But in the long run, making these small changes now can have a large payoff in the end. So now if we take a look at this poll question again from the beginning, if you feel like your question or your answer has changed, good. If you feel like you think your question or your answer should change, then that's also good. If you feel like you've learned something, then we greatly appreciate your time today as well.
Yeah, and also we went over a lot of information, and I know you're going to retain a small portion of that. The big takeaway here is your credit score is important. You have control over that score, and you have a lot of resources to understand it and improve it. And we are one of them. So reach out to whoever you feel comfortable with, but always feel free to reach out to us as well, and have someone to kind of help you really understand that if you feel like a lot of this wasn't pertaining, it was over your head, or you fell asleep.
Great point. Thank you, Chris. And remember that this is your money and this is your life. So we do offer complimentary digital resources available 24/7. I do believe that is on our resource guide that was attached within the comments there. As a partner in our financial wellness, Consumers offers a wealth of resources and financial literacy content to help you feel confident in your financial decision making, including relative presentations, quick and informative online courses, and a robust library of educational blogs, podcasts, and videos.
Any other questions?
There are a couple here coming in the chat. So we ended just a few minutes early, folks, which is great. It means we have some additional time for questions. So we'll go ahead and start with the couple that are here. And then if there's anyone else who would like to add some, please feel free to do that now. The first question I have for you is, does the 30% rule only apply if you don't pay your credit card in full for the month? Or don't use over 30% even if you do pay it off in full each month?
Yeah, sorry, Casey. I get excited about this, so I keep just butting in. So
No,
next
go
time,
ahead,
tell me,
Chris.
feel free to take the question. But so typically, the biggest impact that 30% ratio is having is on what's called your revolving debt. And that's the name for anything that's like a line of credit, like a home equity line of credit, or specifically credit cards, which you're asking about. And essentially, you want your statement balance is typically what's reporting to your credit report. And so you really want to keep that balance on a consistent basis. Averaging is a good way to think of it, under 30% of your limit. So you could keep a balance. So let's say you had a $1,000 credit card. You could just make it a goal to say, hey, I just want to keep that balance under $300. I'm not going to pay, I don't have the money to pay it off, but I want to at least pay it down to $300. It is always better to pay it off. Paying it off, even in full, is going to build your payment history, but it's also going to keep that ratio lower. One last thing to remember too is that it's an aggregate of your balances. So if you have 3 credit cards and the total limit is 30,000, and maybe you keep a balance on 1 credit card that you don't pay off every month, but try to keep that balance below 30% of the total, and then you really work on paying off those other cards down to 0. The other reason, lastly, why it's great to pay your credit cards in full each month is if you pay your credit card in full, you do not pay any interest for the credit card that month. And so as a strategy, if you have more than 1 card, keep 1 card that has a balance, keep 1 card you can use for everyday spending to get the rewards on if you have them, but pay that portion off in full so that you're not keeping a balance on the card. But yes, overall, it's the overall balance of all of your revolving debt, and the 30% mark is what you want to keep as an aggregate balance each month below that 30% mark of your total debt, of your revolving debt.
Thank you. Next question here is, many years ago, I opened a few credit cards from retailers and I no longer use these cards. Should I contact the companies and close them? Should I just not activate new or updated cards that arrive in the mail? Should I leave them open even though I never use them? What would your advice be?
If you have thoughts, Casey, feel free this time.
My one main point is it is often looked at the credit age. So if this was a card that you opened when you were freshly 18 and that is your longest line of credit, I would suggest leaving that open, because age of your credit is another strong factor that goes into calculating the overall score. There's many small factors that go into that score, and the age of that is one of them. So I would say keep your oldest line of credit, which would be your credit card, keep that open so that your age does not go down and negatively impact your credit score.
Yeah, and for the second part of the question, oftentimes it's actually a good thing to open a new credit card for a couple of reasons. One, you have more credit history, right? So you can make payments on that you're using, so you're building that payment history. And 2, we just talked about that 30% ratio, right? Keeping that debt amount 30% less than the total balances. What's nice is if you have 2 credit cards that you're not using, that's a certain amount of debt, revolving debt balances that you're not using to help that ratio stay lower. So I agree. Keep your longest credit cards open. And if you don't have too many, don't be afraid to open another one, especially if it's one you're going to use to build that payment history.
Thank you. Along the same thread, we have another question that came in that asked, will it negatively affect you if you close a long-standing bank account? What if you've moved to a new bank?
Go ahead, Casey.
To my knowledge, I do not believe that your bank accounts are affecting your credit score. I don't think they are, and moving banks is not going to affect you negatively on your credit score wise. If you are transferring loans, there may be some fees incurred, but transferring just a checking or a savings or a higher yield savings, that is not going to impact your score.
Yep.
Awesome. Those are our last questions in the chat. So I'm going to go ahead and talk at you all for a minute. And if any questions roll in the last few minutes, we'll get to those as well. But thank you everyone who joined us this afternoon. And please join me in thanking both Casey and Chris for sharing their time and expertise with us. We cannot thank you and Consumers Credit Union enough for your assistance in bringing applicable financial programming to our alumni. Our next program will be considering home ownership at 12 p.m. Eastern Time on Tuesday, October 22nd. For more information on these particular programs, you can use the link I just added to the chat. Otherwise, please keep your eyes on your emails as we'll be sending a follow-up email to you later this week. Lastly, please remember that as Grand Valley alumni, our commitment to you is as a Laker for a lifetime. We will always be alongside you and all of our alumni, ready to help you reach your next goals. No matter what stage of your life and career, you can turn to us for a lifetime of support. With this idea in mind, you can find both additional resources and future events by checking out our general website at gvsu.edu/alumni.